The intention of Western countries to impose a price cap on Russian oil and gas poses the biggest threat to the energy market, which in turn raises concerns among investors. Against this background, the quotes are standing still. After all, the very idea of limiting the price of Russian energy may lead to a serious energy crunch, followed by a surge in prices. Even if the United States and the European Union give up this idea, oil will still gain value. The only question is how strong this rise in prices will be. According to experts, the volume of production will drop noticeably this autumn, while energy demand will soar. A possible price cap on Russian oil will only exacerbate this situation. Thus, the market has lapsed into limbo as the scope of the challenges that lie ahead is not yet clear. According to the trading chart, a corrective move from the area of $97.50 and $100 per barrel allowed Brent crude oil futures to add about 9%. As a result, the quote returned to the $180 mark and then slowed down its bullish run. If the quote consolidates above the $110 level, at least on the 4-hour chart, market sentiment will change to bullish and the benchmark will extend gains. Otherwise, the downtrend will resume and Brent crude will trim early gains. Having reached its lowest value since autumn last year, gold has stabilized around $1,740 per troy ounce. Now, much will depend on the US Federal Reserve and the European Central Bank, more precisely on their further plans regarding interest rate hikes to be announced at the upcoming meetings. Until then, gold is likely to continue trading in a relatively broad range of $1,730 to $1,750 per troy ounce. As for the ruble, the Russian currency is recovering from its recent sharp swing, heading towards the mark of 60 rubles per dollar. This is due to the fact that most of the restrictive measures contributing to the ruble's strength are still in effect. In addition, there are signs of economic stabilization in the country. In particular, inflation slowed to 15.9% from 17.1%, although the rate is clearly higher than in the United States or the euro area. It's not growing but declining. Nevertheless, the current exchange rate is still quite high, thus it could hurt the country's businesses. The only thing that could slightly weaken the exchange rate of the national currency is a further cut in the key interest rate by the Bank of Russia, and the next rate review meeting of the Bank of Russia Board of Directors is scheduled for July 22. Until then, the ruble is expected to keep rising, and therefore the US dollar may well fall below 60 rubles within the next 2 weeks. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.